Good afternoon, Tsupiteros, and welcome to another edition of Pillow Talks. We did this on a Monday afternoon. Unlike our previous sessions, we were kind of busy during the weekend. But just as always, we're going to start off by talking about the PSEI index, and then we'll go to some specific stocks later on. So I'll show you first the chart of the PSEI index. Okay, so this is a 1, 2, 3, 4, 5 month chart of the PSEI index, and I was kind of blindsided the last couple of days, in the PSEI index. When the market did this big rally in early August to mid-August, I was already expecting the market to, hopefully, to trend up already. No, especially given that the consolidation here appears to have been over, and then it might have been time to start trending up already. But unfortunately, after what it did in the last few days, wherein the market dropped all the way back down to its 61.8% Fibonacci retracement, it told me that the market still isn't in an uptrend mode, but is still in a sideways trend. If you look at it from a bigger perspective, you can see that the market is now moving within this pretty large symmetrical triangular formation, and is now approaching the support line of that formation. Mind you, the more that the market drops lower from here, the more that it tells us that the market is in a sideways trend, and that's not really a good sign for the bulls. Although it doesn't really say that the market's gonna trend down. It's just saying that the market is in this very boring up and down consolidation at the moment. Okay, so I expect the market to bottom probably sometime in the next couple of days, if not last Friday already. And once it bottoms here, I expect it to climb back up, maybe go towards the 6,050 level, and then continue to consolidate from there. So I don't see the market trending up from here after what it did in the last 6-7 days, unfortunately. So I guess market punters or Tsupiteros would have to look for some alphas, like the cement companies or the mining companies, in order to be profitable in this market. Otherwise, if you're gonna continue to trade the blues or the second liners, then you'd probably be a bit frustrated, given how given how erratic and how just up and down the market is in right now. So I guess we'll continue to be this way until the end of the ghost month. And let's see, maybe after the ghost month, the trend will change, or hopefully for the better. But for now, expect continued sideways and up and down movements from the PSEI index, with support at around the 5,800 level, and resistances at maybe the 6,050 to 6,100 levels. So that's it. Before I continue with my video for this afternoon, I'd like to thank one of my sponsors, AP Securities. If you'd like to trade with a broker with excellent research, then do trade with AP Securities or APS Online. Okay, I'll get back to the index again. As you can see, the market is trading in this symmetrical triangular formations. But although the market is in a triangle right now, which is neutral, it's not bullish, but it's not bearish either. There are some stocks that look more bearish than others. And there are some stocks that look more bullish than others, and also there are some stocks that are quite neutral. So what I did was, I divided all the 30 components of the PSEI index to those that are bullish, to those that are bearish, and to those that are neutral. Okay, so I'll turn on my Excel file here. Okay, so these are all the 30 stocks in the PSEI index. So these are the ones that are bearish, these are the ones that are bullish, and here are those that are looking almost exactly like the formation of the index right now. Okay, so obviously those that are bullish, you've been noticing Emperador has been trending up very strongly recently. Pure Gold, RRHI, PLDT, URC, and ICT has also been quite strong among the PSEI index. And those that are bearish are, well, there's Alliance Global, some property companies have been looking bearish, some banks, and of course Bloom has been looking bearish. If you look at their charts, you will notice. Okay, so this is PLDT. So obviously that doesn't look anything like the index. Okay, so that's very, very strong compared to the chart of the PSEI index. If you look at something like RRHI, it also is quite strong relative to the index, and especially, for example, something like Pure Gold. Okay, on the other end of the spectrum, you have like the banks, for example, Metro Bank. Okay, it's unlike the PSEI index, which is forming a symmetrical triangle. This one is actually forming sort of like a descending triangle. Okay, so it's a descending triangle isn't really very bullish, and may indicate that in the big picture it might just be consolidating before it continues to trend down. So you have some of the banks, like Metro Bank, BDO, also looks the same. BPI looks a little bit more neutral than bearish, okay? And as well as Security Bank. Security Bank is also looking a bit more neutral than bearish. Okay, so I prefer BPI and Security Bank rather than Metro Bank and BDO. All right. With regards to the property, RLC is also looking like a a descending triangle here. So you have this very big spike here all the way to around the 23 peso level sometime in early June, but it just started to drift down after that, and it tried to rally here in early August but was not able to sustain it, and it's looking like it's just consolidating at its lows. If it's really a strong stock, then it should have rallied all the way back to the 18 or 19 peso levels already by now, but the fact that it hasn't and it's still consolidating at its lows may not be a good sign for the bulls. Then you have Ayala Land. Ayala Land also hasn't been performing very well. And ever since early June has just been continuing to go lower and lower every week. And right now, although it might rebound from current levels because it's currently trading at its previous lows and its support levels, generally in the big picture, It's a little bit the bias for Ayala Land is more bearish than bullish. All right. How about the other property stocks? Let's see. SM Prime. SM Prime is a bit more neutral than bearish. You also have what else is there? Mega World perhaps is a little bit more neutral than bearish. Okay, so um, so generally, the banks, the properties look quite weak with regards to relative to all the other stocks in the PSEI index. And then, of course, there's Bloom, which is the only gaming stock in the entire PSEI index, which has been, just consolidating here at around the 6 peso levels starting from mid-July. That normally isn't a good sign for the bulls and may indicate that prices are just consolidating right now before it continues to go down, possibly going near the 5 peso level if I were to guess where its next move is going to be. Okay, so among the bullish stocks, of course, you have Emperador, you have Pure Gold, okay, and all the other stocks that are neutral. Okay, so you have here the likes of Ayala Corp. So as you can see there, it's this one is like in a symmetrical triangular formation. Okay, so here you go, something like this. Okay, so it's moving almost exactly like the PSEI index. And then you have, for example, AEV is also in a consolidation, and it looks almost like the PSEI index. You have JFC, you have Globe, so these are the stocks that, if just one glance at it, and you'll see that, they're not really bearish, but they're not bullish either, just like the entire market. So if you were to buy something right now, I guess the ones to buy would still be those that are quite strong in the market, or at the very least those that are neutral. And I would avoid those that are currently bearish. Again, those that are in my bearish list in the PACI index are Ayala Land, BDO, Alliance Global, Bloom, BPI, GT Cap, Metrobank, and RLC. All right, so that's it. Before I continue on with my presentation for this afternoon, I'd like to thank another one of my sponsors, AAA Equities. So if you'd like to trade with a broker that have automated stops and automated breakout orders, then you may want to trade with AAA Equities. Okay, so the next topic that I'd like to discuss with you this afternoon is no other than everybody's darling right now, Cemex Holdings. From a low of about 86 cents, the stock has jumped almost double just in the last 1 month, all the way up to 156 last Friday. So what's going on? Obviously, there's something going on, and the rumor is that SM might be interested in Cemex. Okay, I'm not sure if it's about a merger or a buy-in, a buyout. I don't know, but I mean, I guess based on its behavior and its movement in the last 1 month, and especially in the last few days, you can conclude that if there is smoke, then maybe there is fire. No, so it's quite possible that the rumor is actually true, but I guess as long as the as long as the news isn't official yet, you can't really be 100% certain of what's really going on, right? So um, I did a analysis here of CHP relative to Holcim, because people are buying Cemex right now with the um, with the presumption that the valuation that San Miguel gave to Holcim before, where it was interested in buying Holcim, a year ago, would be the same valuation that the SM could probably give to Cemex right now. Okay, if you'll remember, First Stronghold, okay, was supposed to acquire 85.73% of Holcim for $2.15 billion. Okay, it's just that the agreement lapsed after a year, when the Competition Commission was not able to give a go signal for the sale. But assuming that First Stronghold would acquire 85% of Holcim at $2.15 billion, then that would be equivalent to exactly 19.43 per share for Holcim. Okay, at that price, the valuation of Holcim in terms of the PE ratio would be a whopping 50 times its earnings, assuming 2.5 billion pesos a year. So I wrote here the earnings of Holcim for from 2017 to 2020. Okay, so and the 3-year average between 2017 to 2019 is almost 3 billion shares. Okay, sorry, 3 billion pesos. But, just to be conservative, I used 2.5 billion instead. And at that level, Holcim, or sorry, First Stronghold was trying to acquire Holcim at 50 times its earnings. All right? Wow, just imagine that. And let's just apply the same valuation to Cemex, assuming, let's say, the rumor of SM acquiring or merging with CHP is true, and they would also acquire, let's say, Cemex at 50 times its earnings. I arrived here at a value of about 242 or 241 per share, 242 per share. Okay, so at that level, at 242 per share, okay, Cemex would be trading at the same valuation that First Stronghold was supposed to acquire Holcim. And that's, I guess, the presumption of some people right now. That is why the market is still buying Cemex even at this current level of 146. You have to remember the recent stock rights offering of Cemex was at 154. So, and there are like more than 8 billion shares that acquired the SRO. So for prices to go a lot higher than 154 would mean that all these people who acquired Cemex at 154 would already be making a lot of profits already. Okay, so you just have to keep that in mind, while if you're going to trade Cemex. So anyway, I also put here all the annual income of Cemex in the last 3 years, and so I did a 3-year average, it would come out to about 322 million pesos per share per year. No, but let's just remove this negative amount in 2018, and let's just use 650 million, which is what it made in 2017 as a base earnings for Cemex. So at 650 million pesos income in 1 year, and I divide it with its current market cap of 19 billion pesos, I would arrive at a PE right now of about 30 times, okay? So I have here a comparison of Holcim and Cemex, okay? So if Holcim was at 1943, that would be equivalent to 2 pesos and 42 cents for Cemex, okay? At Cemex's current price of 146, that would be equivalent to 11.74 for Holcim with the same amount of PE ratio, okay? And at Holcim's current price of 594, that would be equivalent to 0.74 for Cemex, or at a PE ratio of 15.33. So what does this mean? Well, obviously, Cemex is trading a lot more expensive right now than Holcim. Okay, that's one conclusion that we've come out of this exercise. Another thing is that if Cemex is quite expensive right now at current levels, that would mean that if the deal is off, then Cemex can drop significantly. Alright? So that is the risk that Cemex buyers are having right now. But of course, if the deal is on with SM, and SM would be acquiring it at, let's say, the same valuations that First Stronghold was willing to acquire Holcim before, then it's not impossible that Cemex could be acquired for 2 pesos or higher than that, or again at the same price of, at the same valuation of Holcim of 1943, which is the price that First Stronghold was which is the price that First Stronghold was interested to buy Holcim. That would be equivalent to 242. So that 242 is now like the ceiling price of Cemex. But again, that's not impossible as long as the deal is on. I don't expect, if the deal is on, then I don't expect Cemex to be sold at 154 or lower, because the stock rights offering was at 154. So there you go. I guess at this point you just have to, if you're interested in Cemex, you just place a bet, and if you think that the deal is on, then I think at current levels, then you're gonna expect prices to be higher from here, and expect the deal to be at least more than 1 peso and 54 cents per share. But if the deal is off, expect prices to drop back down to 1 peso or lower. So it's a high risk, high return trade. Up to you guys. Personally, I'm keeping myself. I'm not really trading that stock at the moment, because I think the risk is a bit high. But again, given the movement of the stock in the last few days, then maybe again, if there is smoke, then there's fire. So that's it. That's it for this week's Pillow Talks. I hope you enjoyed it. I hope you learned something from it. So do visit our website, Tsupitero.com, and do visit our YouTube channel. And see you again next week. Goodbye.